Indiana has reached an unemployment rate of 9.2%, and many Hoosier families are turning to unemployment benefits for the very first time just to pay for basic daily necessities like food, gas, utilities, and housing. Currently, members of the Indiana State Senate are negotiating changes to the state's unemployment system. An imbalance in the system has left Indiana borrowing money from the federal government to make up for a dramatic shortfall. As of mid-March, Indiana has borrowed more than $500 million from the federal government and is now expected to borrow more than $150 million each month until the problem is resolved.
We're taking in less in premium payments from employers than we're paying out for unemployment benefits to workers who've been laid off. And you can't do that very long, even in your own checkbook at home, before you're bankrupt. And that's basically what's happened. We are now out of balance about $150 million per month. So every month, we're adding on another $150 million deficit. So the sooner, the better. This is a huge problem, complicated issue, controversial at best, but it has to be fixed, and it has to be fixed now.
Well, I think every month we wait to do something about this, it's going to be another $150 million in the hole for us. So we really need to look at this and see what we can do to come to a quick consensus on what we can do and help this problem out.
What we really want to do is make sure that this bill doesn't do something that's going to harm small scale employers. We have several of those across the state of Indiana, but we have a very high percentage of those in my district back home. So we want to make sure they're protected.
Well, certainly, obviously, we are in the midst of perhaps the worst economic downturn maybe since the Great Depression now at this point. So we have unemployed workers in all different fields, and unfortunately, the notices are adding up each week. And certainly they want to know that we have certainty going forward and stability in the system. Hopefully we'll get them back to work shortly, but unfortunately at this time we can't assume that.
This is money that is spent immediately in local neighborhoods. It's spent in the grocery stores, it's spent in the drugstores, it's spent in the gas stations. And so that's money that stimulates the local economy and drives the local economy. And so the benefits that are paid to a family, to support that family until they can find work again, is very important, not only to the family, of course, but also to the community in which that family lives.
This year, Indiana could receive nearly $150 million in additional federal stimulus funds specifically for unemployment benefits. Governor Daniels has indicated that he will likely turn down those federal dollars because the state would need to expand some benefits in order to qualify for the federal money.
Well, the federal stimulus money would be a great bet for Hoosier workers in terms of, as I say, we are in a very difficult economic situation. These federal monies are leverage dollars, so to speak, where it allows Indiana not to have to put up as much money and yet still provide more benefits, which actually will help our economy emerge from this recession sooner.
Now, we have data and information that shows that the federal stimulus packages, if we implement them in Indiana, should add about 13,000 additional workers onto the unemployment rolls, and that the federal dollars will pay for those programs over a period of at least 4 years. So this is not an amount of money that we can just say no to.
Senate Democrats believe the unemployment funding shortfall must be addressed immediately and in a way that protects both workers and the state's economic viability.
It's going to take a while to get us back out of that hole. We're not going to do this overnight, but we have to come up with a mechanism to get enough money in there without a substantial cut in benefits so that we can turn this around.